Hey guys, good evening. Dave Santarelli here from Santarelli School of Options, optionstrading.college. So we had some requests about how to grow a small account, a little blueprint and a roadmap to success there. Now this is obviously for aggressive growth. I'm going to go over some models and some examples with you guys and really show you guys how to do this. First off, you guys know our trade plan. It's very important that you understand our trade plan. If you don't know what our trade plan is, you could go right over here on Discord to the left, educational videos. If you guys click on that, and you guys could go up here and you guys could watch everything. Growing your account. This is a perfect example of growing a smaller account there. And this is from our first trade challenge. This is understanding calls and puts if you're a beginner. Position sizing is key there. Options trading for beginners. These are all just PowerPoints and stuff I've made over the years there, or that I've gotten online. And then right here, this is gonna vertical spreads. We've been trading a lot of those lately. How to manage your trade with hedging. And then here's our master trade plan. So that's a great video for you guys to watch. It's a very detailed trade plan. So make sure you guys understand the trade plan and all of this will make sense. So our trade plan, like I said, there's the videos of it there and gave that in the trade room there. So let's go over this now. So first off, let's go over an example. Someone requested like a $2,500 account. Okay, so first off, if you have a $2,500 account for day trades and scalps, 8 to 10% of your account in the trade. Okay, so if you have a $2,500 account, multiply that by 0.08, that's about $200 per day trade. Okay, and I'm going to go over the charts with you and show you, you don't need that big account there. Just like how I went over in that example on these videos here, how we grew our first trade challenge account from $2,500 to over 30,000 in I think it was like 2 months there. So you could watch that video there. It's detailed along the way. So like I said, anywhere from $200 up to $250. So an example here, you make a $200 trade, it makes a 20% return. You made $40 on that trade, on that day trader scalp. And you're looking to make a few of those per day if the market's giving you those setups. On the higher end there, if you did a $250 trade, you made a small 15%, it's $37.50. Towards the end of the day, or if the markets are getting a decent breakout, you do a smaller 8% trade there with $200. You make a quick 70%. There's $140. So you're well over $200 there off of just 3 trades if you're waiting for those good setups per our trade plan. And I want to go over that trade plan with you guys quick once I get finished with this because it's very important and it's going to help lead you to success. Especially if you're a new trader, you really want to follow through with that trade plan. All the successful traders in our trade room, they have one thing in common. They all follow the trade plan. They might have a little variation to it that they tweaked, but they all follow the trade plan. Okay, so it's very important to go through that and like I said there, let me put that off there on Discord. So you follow through with the trade plan and you're making these position size trades. Okay, swing trades anywhere from two days to 60 days till expiration, 15 to 20% of your account size. So if you have a $2,500 account, multiply that by 0.15%. That's about $375 to $500. And you want to do no more than one trade of that at a time because it's less than 60 days till expiration. It's a little bit higher risk. So you're going from the riskiest trades here, your day trade scalps, to medium risk, and very low risk with going with leaps. So you're seeing here the swing trades, 2 to 60 days. Like I said, $375 to $500 per trade. You have a $375 trade. It makes 40%. It's $150. And you're looking to make like at least, one, two, maybe three of those per week. Okay. If the market's given, if the market's in NTZ, then you're sitting back, you're being patient, and you're being disciplined. I don't know why that came up there. That's not playing over there, is it? Okay, shut that off. All right, so getting back to this, swing trades 2 to 60 days. Like I said, $375 to $500 per trade. You make a $375 trade, it makes 40% return. That's 150 bucks. On the higher end there with 20% trade, $500 trade with a 70% gain, it's a $350 profit. So you can see a $350 profit that just grew your $2,500 account really quick there, more than 10% off of just one trade. So if that grew your account right here by over 10% on just one trade, there's 21 trading days per month. If you find one of those solid setups per week there and you do the math there, compound it over time and keep increasing your position size as your account grows, you'll see why it's important to wait for these solid setups. You don't have to force trades. There's too many people in the trade room I personally see that are trying to like force trades here and there or force day trades more specifically. Sometimes you just got to wait for that whole market momentum. You want to see the general markets have that momentum for true breakouts on that intraday chart there where you're trading off the minute, 3 minute, or 5 minute charts. So that's what I like to wait for with day trades. Wait until you really hear tick strike taking off there, some news coming out that's going to move the markets or any type of catalyst. So that's what I'm looking for with the day trade scalps. Swing trades, you're following through with that trade plan. The day trades and scalps are going to be more larger breakouts, stocks that have momentum in the morning. When I send out the newsletter and I give like the list of 10 to 20 stocks that I'm seeing that are having the largest moves, those are ones you might want to focus in on for some quick scalps and day trades throughout the day. On the swing trades, we're looking for something that's starting that bomb cycle on the daily chart there. Okay. And then our longer term swing trades, obviously, trade plan leaps are, I like looking at leaps for something that had a very large breakdown over several months. They're at the lows for the past like 52 weeks, year lows. And then it's just starting that bomb cycle, the breakout momentum cycle of our trade plan. And it has a catalyst to go with it there. That's a longer term trade. You could use 25% to 35% of your account for more aggressive growth risk there. So now let's go over this. So remember this, take a screenshot of that, have that on the side for yourself. Now I want to go over this because this is a perfect example of following through with the trade plan, right? Look at SPY. So if you could see SPY right here, we had that BDM start, right? There's the 10, 20 cross below. Here was that MACD cross below. And then guess what? We started trading below zero line on this histogram of the MACD for quite some time, right? So we have our 3 check marks that gives us our confirmed entry for our puts. We traded down, sharp breakdown, got up to that blue 20-day simple moving average, had a breakdown. We had a double test there of that bottom, had a good solid support at that 550. It got back up to that blue 20. It failed, rejected, and we made our lows for the year there. And that came down to whatever that was right there. What was it? We came down to, what was SPY at? 482.55. So that was a big drop there, right? Now look at, this is what's important. I'm going to go over puts here to the downside and then calls to the upside when we had our trade plan trigger our entry. With the MACD cross, started trading above zero line on this histogram of the MACD, 10-20 crossover on that daily chart, and your first green candle above the 10-20-day simple moving average. That's our 3 check marks for confirmed entry into calls. And this over here, 10-20 cross below, MACD cross below, and these bars right here trading below the zero line on the histogram of the moving average convergence divergence, 3 check marks equal puts, right? So now what I want to show you is very important here. Watch this. We could go over here and we could chart SPY, right? So we already have SPY. Now let's see, when did we get our trade plan entry with that BDM cycle, right? Here was the 10-20 cross below. Let's go over this together because this is a prime example of following through with that trade plan. So first you're going to have your MACD cross below. You started trading below zero line on a histogram of the MACD, but MACD cross below, and then here's your 10-20 cross below. Next red candle is your confirmed entry. So you have your MACD cross below, 10-20 cross below, and then a candle below the 10, 20-day simple moving average. That's your 3 check marks. 3 check marks equal confirmed entry for your puts here. So now let's see, what day was that? That was on February 27th of 2025. So write this down here with me. I want you guys to go over this. This is a perfect little example here of why it's so important, here to be going over this. And let me share my screen on Discord too, in case some people want to watch it. I put it on there, guys, for the people on Discord, but please keep your comments, questions to the end there, and I'll address them because I don't want this turning into a 4-hour class again. But we're going to go over this perfect example right here of that 1020 cross below, the MACD cross below. And again, we're going over our trade plan and how to grow that small account. So getting back to this now, if we take a look at SPY, SPY. Now, what day did we say we got our confirmed entry for SPY puts? And February 27th. So Feb 27th. And then when did we get our exit out of that? 1020 cross started trading above 0, and then it was over right here. So that was on 4/24, April 24th. That was the exit of our BDM cycle. So now what I want to look at here is going and looking at that July monthly expo. And I want to show you guys our entry. If we got into SPY puts right here per our trade plan entry and then exited on our exit strategy, watch what you would have made to the downside. And then I'm going to show you to the upside. And again, this is something you guys that are just joining us from Discord there, the beginning part of class, I was going over the strategies here for growing your account. Someone requested how do you grow your $2,500 account steadily? So I went over that in the first half of the video here, and we're going over it now again with going over your swing trades and your longer term swings. So we look at SPY, and we look at that SPY put for February 27th. And when she got that BDM cycle, she was right around 593. So you always want to trade the monthlies on your swings. And that was at 593. So we'll say the 590. Now watch this. This is going to chart this going way back. So that was the 590. I got to put this here too on the blue for it to chart it. All right, so watch this. I'm going to click on this option chain. And it should come up here. There we go. All right, so take a look here. So as we were talking about it, February 27th, this was our entry into our SPY puts. Now, do you see right up on top here where it says we're actually charting the SPY July 18, 2025, 590 strike put, right? So I was just showing you on that chart, on the SPY chart here. Let me bring this over because this is very important. Okay, so take a look. Here's the regular SPY chart. So on February 27th, that's when we got that BDM cycle that started right here. Here's February. Here's the 27th. Here was the 10 crossing below the 20, the MACD cross below, trading below 0 line on the histogram of the MACD. So watch. On February 27th was our confirmed entry into a SPY put. She was trading at 597. So I'm going with the 590. What was it there? The 590 strike put. So if we look at the cost of that on February 27th, here it was right here. The cost of this SPY 590 strike put on February 27th cost $20.55. Write that down. That's how much the SPY July 18th 590 strike put cost when SPY started BDM cycle. All right. So now I said, when was the day that the BDM cycle ended? We said on April 24th. So now if we come over here, we look at April 24th. We have our candle full body above that 10, 20-day simple moving average. MACD crossed above. We're trading above zero line, and you had the 10, 20 crossover. So now let's see what the exit price was on April 24th. April, look at how much that trade went up to $106. Remember, this is a longer term expo. April 24th. Here's April 24th right here. It's at $48.37. So now there's the beauty of it right there. First off, it was worth over 500% here when she was trading above 100. But on your exit date, it was worth $48.37. Now, if you do your proper position sizing on that trade, you'll see that's going to make you quite a bit of a return there. You're going with a longer term trade. It's less risky. You're getting a further out expo. And the most important part there is you started that trade right when it started that BDM cycle. So you took advantage of it, a longer term trade setup, and it was worth quite a bit there, over 500% at these lows right here, down to about 480. So that's following through with the trade plan on your swing trades. Now, like I said, if we go to that breakout momentum cycle here and we see the 10-20 crossover and we take a look at that date was on April 25th. So April, we'll go right here after the 10-20 crossover. That's what I was looking at. So April 28th, it's going to be a little bit more expensive, but that's following through with the trade plan, 10-20 cross, MACD cross, trading above zero line on the histogram of the MACD. So this is what you're looking for as far as your longer term trades. Like in the larger account, that's the type of trades I look for, more leaps than anything, something a few months out, because it's really going to grow your account and be much less riskier than day trading those same day expirations, because if you over trade on day trades, you're really going to have a bad day, and I'm going to go over day trades with you after I go over these swing trades, because this should be the core solid part, the foundation of your account and the growth of your account. Because you're looking for any stock. It doesn't have to be SPY here. When I send out that newsletter in the morning, I'm giving you the top 10 to 20 stocks that are breaking out that day. Those are the ones that I want you to look at in the pre-market there and look at each one of those charts, look at the price action in the morning and decide, hey, is this a stock I want to look at for a possible day trader scalp? Because when I go over the day trades and the scalping strategy with you here in a minute, then it's all going to come together for you as far as your position sizing with your day trades and scalps. Like I said, on your day trades and scalps right here, you only want to do 8 to 10% of your account max with a smaller account, a $2,500 account. So that's $2,500. Multiply that by 0.08. That's $200 to $250. I mean, that's it. You don't want to trade any more of that. You have a $2,500 account, $200 to $250. If you have a $5,000 account, then $400 to $500 per trade. And you don't want to do more than one trade at a time with a day trade. Okay, so now what I'm going through is the trade plan, because your execution is what matters when you're trading. Following through and executing on that trade plan is going to give you your larger gains. Okay, not just like when you're looking at the stock all day, you're live with me and you're just seeing something and you're like, oh man, these are larger candles coming in, but it's trading in that no trade zone. You want to stay away from those. Okay, so getting back to it now. That SPY call, let's go over the cost of that on April 28th. So I'm going to write this down, April 28th. And then she's still in the breakout momentum cycle right now. Just like in the breakdown momentum cycle, take a look. I mean, this is trade plan perfection. It had the pullback. It got up to the blue 20-day simple moving average, straddled it, rejected, pulled back. It made a solid double bottom right there. And that was at that key psychological level at 550. And then it got to climb up to that blue 20. And notice how it didn't break through that high, the previous high there on that little climb there after the pullback. So that's a sign of a rejection also. And she filled at that blue 20. And then you see this candle right here. Well, guess what? This candle means that you ended at the lows of the day. You see a large red candle like that, and she's closing at the lows of the day. That's a big sign. Like just like my mouse pad here, or any of the diagrams that I have there in the educational video library. You know, that's one of your most bearish candles you could see. It is the bearish. You know, you got candle rejecting at that blue 20. It's a candle below previous candle's body, and it's closing at the lows of the day. So, you know, that's telling you right there that you're going to see some move lower the next day, most likely. So, you know, you had that large rejection pullback. And that's what I'm talking about here. When it was in that BDM cycle, the breakdown momentum cycle, you see it having that drop, getting up to the blue 20, rejecting, coming down, having support right at that key psychological level at 550, getting up to that 20, rejecting, and then she had a larger pullback and ended up coming down to what do we say it was there? 470. I think we said 470 or 480. And then when she started that breakout momentum cycle, you have that MACD cross. You're trading above zero line on this gram of the MACD. And then guess what? Just like you use that 20-day simple moving average as rejection in the BDM cycle, well, in the breakout momentum cycle, when she has that large climb, she's usually coming back down to that blue 20 on a larger pullback there, getting that climb again, making new highs. Here was previous highs, so it smashed through that, made some new highs here, and then she came back down to that blue 20. And that was the day that we said, hey, you know what? We're climbing off that blue 20. And that's why we had such a successful week last week, is because we saw SPY and the markets climbing off of support there and getting that breakout. So we had a hell of a week last week by following through with our trade plan. Now, this is the midpoint of our trade plan. You know, I mean, she's been in that breakout momentum cycle for a while. You know, of course, we're at new all-time highs as futures are looking right now. And our trades are up thousands of dollars. Even in the smaller Robinhood account there, we got about a $3,000 simulated profits on Robinhood. And that's not using much money. I think we had used about 2 grand in options there, and then the 4 grand on Q calls. So like $5,000 to $6,000, and we're already up 3 grand overnight on the very first day of the trade. So that's amazing. And our spreads, if you guys got in our spreads, are great ways to reduce the cost of a trade and have substantial gains. Our MetaTrade, that's a max return of, I think, 480%. Our first MetaTrade, 870% gain on that. No, you're not buying SPY puts. We're not talking about SPY puts. You don't need SPY puts. Markets are at new all-time highs. You do not want a SPY put. I'm going over the trade plan, and when you entered into the puts there, and then when you exited, I'm simulating and showing you guys on here how the profits you would have made. So getting back to that, actually, you can see right here, we got our entry we set on April 28th. So now if we go back to the option chain here, let me bring up that option chain, and we look at, let me get rid of all that drawings. Okay, so now if we look at SPY, July monthly expo, and we look, where was SPY at when it started that bomb cycle? She was right around, we'll say 547. So 547. Now let's click on these, and we'll link that in the back here. Link. Okay. So now here's the 547 strike calls on SPY. We put this over here a little bit so you could see the graph. So now here's the beauty of it. You follow through with our trade plan for the entry into the SPY calls. This is where you want to look at your longer term trades. Like I said, anywhere from 3 months to 6 months until expiration. And this is where you want to make the larger trades at in your account because it's consistent with following through with the trade plan. And after that large pullback, that's usually when you get that buying pressure that comes in. So you had a massive pullback there. And then when that bomb cycle started, the breakout momentum cycle, you had aggressive buyers coming in and just a solid breakout for weeks, which led us to new all-time highs in the account. So now getting back to this, if we take a look at the SPY 547 call, we said it started April 28th per trade plan. So does this one go? This one doesn't even go back to April 28th, does it? No, it doesn't. Not enough data. So let's do the we'll say the 550. Maybe that was just two. 550. Let's take a look. Link to. Okay, here we go. Yep, this is perfect. Okay, so you can see right here, this is the July 18th, the 550 strike call. So when SPY started that breakout momentum cycle, like we said on April 28th there, take a look at if you entered into that call per our trade plan entry and what it's worth now. So if we take a look, SPY on April 27th, again, this is charting the SPY July 18th 550 strike call. So we come back down here on April 28th. Here's April 28th. She's at $23.62. 23.62. Okay, look at what it's trading at right now. Right now, it's currently at $66. This is the importance of the trade plan and your position sizing, guys. I'm telling you, I could lead you to the water. I could help guide you every single day with this, but following through with your position sizing on key, types of trades here, where we're talking about trades 3 to 6 months out to Expo, when you're starting that bomb cycle or the BDM cycle, that's when you want to focus on your larger account growth, because you're using a larger portion of your account on this trade that's less risky with going out with that further out expiration. You don't want to do a large trade for something that expires the same day or the same week. That's very risky. You're going to see major volatility. Going with something 3 to 6 months out till expiration, the volatility greatly reduces. So that's the key point there of doing the proper position sizing on growing your account. So like I said there, when you're looking at that type of trade, the longer trades, you're going either from 20 to 25% if it's 60 days to 6 months out till expo. If you're trading leaps 8 months out or longer till expiration, then you could trade up to 25 to 35% of your account for that aggressive growth. And again, this is going, with an example of $2,500. So your day trade scalps, you're in it for seconds to minutes, 8 to 10% of your account size, one trade at a time. So like I said, $2,500 account, 8% is how much? $200. 10%, $250. So if you have a $2,500 account, that should be the size of the trades that you're making. And you're looking $200 trade, multiply that by 20% profit, you made $40. You're looking to make about 4 to 7 of those trades throughout the day based on volatility, based on momentum in the markets. If the markets are flat and in the NTZ, that's why we have that part of our trade plan, the no trade zone, where we're trading between the simple moving averages and the MACDs kind of combined there. That's when you want to sit back. You just wait, sit on your hands, be patient, disciplined, and wait either for that news, a catalyst, or for that volume to start coming in. And that tick strike is what's going to guide you. Because once you hear tick strike starting to go, then there's volume. And then there's momentum starting to come into the market, whether it's to the upside or the downside. That's why it's important to listen to that. So then your swing trades, your day trades, like I said, $250. You make a 15% return, $37. On Friday there, we had a trade make what, 170%. So a $200 trade, 70% gain, $140. The trade on Friday, I think, made 170% gain. It was incredible on that SPY breakdown that we traded. So again, you're growing your account, with these longer term trades. You're making kind of like little trades here to grow your account throughout the day with the day trades and scalps. Okay, so that's what's important about growing that account there. And like I said, if you look on Discord and you go down to that on the left-hand side here, educational videos, and you click on that, right here, growing your account, I'm telling you, this is going to be the best video you can possibly watch. I dedicated a lot of time to this. I had to edit it the right way, and I go over day by day the trades that we made and how we grew the account there massively from a $2,500 account to actually that was over $67,000 there. So that was incredible. $2,500 to I think it was 63,000. I'm not sure. It was a couple years ago as our very first trade challenge. So make sure you watch that because it's very detailed and it goes over these things here. So again, that's what you want to be looking at. Leaps are a stock replacement strategy. So that's something there that you could be looking to do, 8+ months out till expiration and use that larger portion, 25 to 35% of your account. You can have up to 2 trades of that on a time. Now, remember, when you're making these swing trades, don't have, if you can make 2 trades max at a time, don't have them all in the same sector, because you want to reduce that risk there of something happen sector wise and then both of those trades losing out there on you. So make sure you diversify there. But that was a perfect example right here of that breakout momentum. Here's the July 18th 550 strike call, and you can see when SPY entered into breakout momentum with our official trade plan entry, that was on April 28th. That's when the MACD crossed already. MACD crossed on April 21st. 1020 crossed on April 25th. And then the next green candle above the 1020 crossover was on April 28th. So April 28th was your official entry into the calls after it was in that BDM cycle that entire time. Now, remember, this is what's important. When it had that BDM cycle and it broke down, what did it get up to as resistance before rejecting and pulling back again? It got up to that blue 20. So when it enters into that breakout momentum cycle now, that's immediately when I'm telling myself, hey, I'm going to be looking for that 20-day simple moving average as support there where I could, look to add to a trade or make a new trade there, being that it, got up to resistance at the blue 20 in the BDM cycle, the same is going to be what I'm looking for in that bomb cycle, the breakout momentum cycle. So that's why we had such a massive week last week, is because I followed through with our trade plan and I closed a couple of trades out early because there was a lot of people getting stressed that the markets were climbing. And then, like, if we had a little bit of a pullback, they'd be like, oh, she's down $1 today. What do we do? You can't look at that. Your exit is when you have the MACD cross below, when the 1020 crosses below, that's your exit, and that breakout momentum cycle is over. Intraday volatility is going to be there. That's why you have to ask yourself, are you an emotional person, an emotional trader? If you're an emotional trader, then the day trades and scalps are not going to be for you. They're not going to be good for you. Then you might want to just look at those swing trades and then say, hey, my target, here's going to be my target, that next resistance. And the nice thing about it is, look at this. I mean, you could literally price them out on the freaking chart. So you're pricing these out. Here's the option chain, right? And I have the option chain linked to a chart. So it turns this into a chart. So again, this is the July 18th 550 strike call. When you have that bomb cycle, I could say, okay, here is resistance. This is what I'm looking to target here, maybe up to that $60 per share. So when it entered into the bomb cycle on April 28th here, and it was going for how much here? For about $24 a contract. Guess what? I could say, okay, $60 is going to be my target. And then you could set your contracts there to sell it at $60. And guess what? It broke through $60. So that $2,400 trade would be worth $6,600 right now, just that one trade, that one contract. So that's how you triple your account really quick, going from 2,500 to 60, almost $70 a contract there. So from $2,500 a contract to $7,000 a contract. Now with that overnight move, they might be closer to almost $80. $75 to $80. So, that's how you're looking to grow your account. And depending on your account size, like I said, it doesn't matter if you got a $2,500 account, $5,000 account, $20,000 account, 100,000 or $100 million account. This is what you want to focus on as far as the percentages for your trade. And then, like I said, if you execute on that intraday minute chart, let's take a look now at SPY. Now let's take a look at the today intraday 1 minute chart if you're day trading and scalping. So, you could see early in the morning, you had a true breakout. Think of this just like your daily chart, but it's a minute chart here. So you had the 10-20 crossover, you had a breakout. It's been holding that 10-day. So, as soon as you have that MACD cross and you're trading above the 10 and 20, you're on a go. So right now, if we take a look at that and we look at that 613 strike call, let's take a look at that. Now, your exit on this trade is when the MACD crosses below. So right here, I'd be out of that trade. Right here, right near the highs, 615.17. That's your momentum ending. So now if we bring this over and we look at that 613 strike call, let's take a look at it. Where was it at? There's your entry right there at 9:37 a.m. So 9:37 was our entry. Someone write this time down for me, will you? Put our entries at 9:37, okay? And then put our exit is at 10:14. You guys remember those times? And we're doing an at the money. So the 613, let's look at. All right, what was our time for entry? 9:37. So at 9:37 here, let's take a look. Here's 9:35. Here's 9:38. Here's 9:36. Here's 9:37. So we'll go up to the upper range of that, right? 426 a contract. So this cost you $426 per contract at 426, right? Now our exit was 1013, we said. Our exit following through with our trade plan, 1013. Here was your exit right here. At 1013, that was where we'll go at the lowest point, 546. So guess what? Your $426 trade just turned into $546. You just made $120 on that $426 trade. That's a day trade number one for you. Now, if you're going over here and you're looking at that intraday chart again, like I said, you're only trying to focus in on strong breakouts or breakdowns. All this stuff here, you want to see candle above previous candle's body. That's what justifies a true breakout momentum cycle. Candle above previous candle's body, you'll have that rejection down to that 10 on the minute chart, and then that breakout. And then here you had a longer term BDM cycle. Here's the 10 crossing below the 20, MACD cross below. You started trading below zero line on histogram of the MACD, the lines and the bars. So here's your really first time you started trading below zero line with your bars and with your lines. So right here was the MACD cross below at 1237, 1020 cross below at 1243. So then if we look at 1243 was our entry for puts, and then what was our exit there? Our exit, she rejected at that 20 every single time. So here was the start of your next breakout momentum cycle. And I'd probably have around 612 as my stop there after the 1020 cross. Looking for it, but it never really got up to that red 50. So I'd be out of that trade right around 612. So we'll say at 1506. What time is that? 306. So let's look at that put there. So that was at right around 616 a contract, right? So if we look at 616 and we look at that put. So 1213 was our entry. Here it is way back here. Take a look. 1213 was back here. That was our entry on our put. It was at $3.31. Now, if we take a look, what time did we say our exit was? At 3:06 p.m. 3:06 was right here. So 3:06, she's at 565. So you paid $331 for that contract, and it's worth $565 on your exit. So 565 minus 331, that means you made $234 on that trade. So just between those two trades, $234 and $120, that's $354 on just those two trades. So that's what I mean about following through with the trade plan and waiting for those solid breakouts and breakdowns. Sometimes, like, I'm just sitting there, I'm quiet. I've been doing this for over a decade. So, like, I like following through with Tick Strike. That's a great new tool that we have. That's when you really start hearing that momentum. I got all these computers in front of me, so I'm usually looking at the news wire. I'll be reading an article. I gave you guys the username and password if you guys want to use Barron's, Wall Street Journal, Market Watch, or the other one there. You guys could go on there, check out the articles. I'm always reading those. I'm looking at the news wire. And then when I hear Tick Strike starting to move, that's when it catches my attention and I start looking at those charts again. Because I really, as a day trader and a scalper throughout the day when I'm on the stream, I only want to focus in when things have momentum and they have that volatility. If they don't have that, I don't want to look at the damn chart because then it's going to make me and force me to trade. Because every time you look at the chart, you wanna make a trade. You feel like you have to do something. I don't like that. So that's why I like doing some reading, some researching there. And then once I hear that tick strike or I see that volume starting to pick up there, then I'll start looking at those charts, the intraday 1 minute, and then I'll start looking for those day trades and scalps. Just like on Friday when I had that trade on the SPY put that made 100 and some percent return. I was on my iMac right in back of this computer. This is my trade setup that you guys are seeing now with the 6 monitors. I was on the screen in back of me on the iMac there. I was doing some research, and then I just heard Tick Strike starting to go crazy. So I just turned around. I took off the mute, and I said, "Guys, I'm jumping into the SPY put," and we had that quick 100 and think 70% gain within minutes there. So that's about following through and executing on your trade plan. Okay, that's what's important there with following through with the trade plan and that position sizing. Position sizing is key. So when you're looking for those day trades and those scalps, like I said, what I like to do is I like checking out the news wire. So when I send out the newsletter in the morning, I'm looking at the top momentum stocks for the day there. So I'm coming over here and let me show you, for example. Doesn't want to come up. I think they used a firewall that if I'm doing like a Zoom or something, they don't have it come up. The news wire is not coming up now. I don't know. Let's see. Let's try to refresh it. It might be because of Zoom there. But that's what I'm doing. I'm looking at the news wire and I'm finding the stocks with the most momentum in the morning that could be great day trades. So when you see that list and I say top stocks to watch in the morning, please take the first like 10 minutes. I send that newsletter out, before 9 a.m. So take 5-10 minutes there, go over those top momentum stocks that I put on there for the day, that are going to be your day trade and your scalp setups. That's what I put those in the newsletter for. I want you to focus in on those, the top stocks for day trade scalps. When I put those on there, those are stocks that are moving 5 to 30% in the pre-market there. And, to capture a quick 1% when the underlying equity moves, the option on that's going to move like 40 to 60%. So one move, a 1% move in a stock with options, that's usually about 10 times it. So, I mean, especially if you're doing a day trade, that's 100% gain. So if it has that 1% move, you're making large profits. So that's why I'm giving you those most volatile market moving stocks in the morning in the newsletter. Those are the ones to focus in on with day trades, and pick which ones you like there in the pre-market. Say, okay, this one's got some good resistance. It might have that continued breakout today, and you might want to day trade that. Find something that you like there. All right, so that's how you're growing your smaller account there. We had a couple of requests that asked how to grow your small $2,500 account. So we just went over that with the different types of day trades and scalps. We just went over how to find and execute really well on those day trades and scalps. Look for those quick $100, $200 gains, and they add up throughout the day. Okay, it's about consistency and following through with that trade plan. If you're good at doing that, like you see some of the traders in the trade room that are really good and very disciplined, especially Captain Thomas, I mean, and Skyjack, a lot of the members there. I mean, there's so many to name, and they just go by names. I don't know their real names, but you know, there's a lot of great traders in there, but they follow through with the trade plan and they execute on it properly with proper position sizing. So, if you're doing this consistently, there's 21 trading days per month. So if you're growing your account by what did we say there? $354 in that example with those two trades, right? $354, multiply that by 21 trading days per month. That just made you $7,434. So your $2,500 account is now at $9,934 after 1 month. It's about compounding your account there with these trades, okay? Because as your account increases in value, obviously the position of your trades are going to increase because you're going off percentages. So I'm telling you, consistency is key. If you're able to drown out the noise throughout the day there, like I do, I'll sit back on my other computer. That's what I got so many computers on my desk for. I'll look and read articles. I'll do research. I'll try to find stocks that have been in breakdown that are just starting to break out. I'll chart them, but I don't look for those day trades or scalps until I really hear some volume starting to come in with tick strike, or I see, some technical setups on that intraday minute chart. But don't force trades. Don't sit there and just look at that chart, for 1 hour there and waiting for your entry. Let the markets guide you. When you hear tick strike, that means volume's coming in. When volume like that's coming in at that level, that's institutions. Institutions, they buy over a period of time. It's not all at once. And then when you have algorithms that are trading technicals. So, if you have the MACD cross 1020 cross, algorithms are out there that'll start buying. There's models that'll start buying shares. And, when they start buying shares, obviously demand increases, stock starts breaking out, and then that starts going on the momentum scanners. People start seeing it come up and then they start buying it. And then it's all of a sudden a buying frenzy, so those are the key moments that I want you guys to focus in on as far as growing your smaller account. Day trades and scalps, listen for momentum coming and catalysts from the news wire, and listen to tick strike. Don't just try to force trades. Wait for all those setups. Wait for some news to come out. And then, like, for example, perfect thing with Canada, that's when we bought the SPY puts. Remember on Friday that made 170% gain? As soon as I heard that deal there with Canada, I knew that was going to be bad for the markets there. And then we started hearing the tick strike go to the downside, and it was starting to go crazy there. So I jumped in those SPY puts, and within minutes, it was like 170% gain. So focus in on headlines like that give you an announcement, and then also you hear it from tick strike. Those are going to be your most solid trades for day trades and scalping. Okay, if you're able to just listen in on that and do that throughout the day and find 2, 3, 4 good setups like that, great. I mean, you're growing your account there, $100, $200 per trade at a time. Just don't force trades. And then, like I said, with your swing trades, 2 to 60 days out till Expo, 15 to 20%, one of those trades at a time, and you're looking for, so for example, $375 on 15%, a 40% gain. Like our Google trade right now is up how much? I mean, that thing is up insane. Let me pull it up here, see how much that's up. Look at this here. I mean, our Google trade is up 54%. With that move it's having overnight, it's going to be up quite a bit. Meta, that trade's going to be up significantly. Nvidia, the AMZZ, which is your 2 times ETF there. Our Google trade, picked up 3 of those contracts for about 3,300, already up $1,200 on that. I mean, proper position sizing, and this is already up 10%. Overall combined. Look at that, $3,800. I mean, you continue to grow your account by, X% per month. I mean, think about it. If you grow your account just by 1/4% a day, $2,500, multiply that by point 0025. That's no, I wanted to do it more than that. 2,500, multiply that by 0.02.5% a day. That's $62.50 a day, right? Think of that. That's super small there. $62. Each of those examples we just went over were $100 plus 200 and some dollar profit, right? So just think if you only made $62 per day. Multiply that by 21 trading days per month. That's $1,312. That's more than a 50% return on your account in 1 month. So your $2,500 account is now worth what is it? I just hit a wrong number there, but it's worth $3,800 after 1 month of just $62 profits per day. And then, like I said, as your account continues to grow, your position sizing is going to get larger, right? Because you're going based on percentage of your account size for each one of these types of examples, where you're focusing in on day trades and scalps. That's when you're looking at that intraday minute, 3-minute, or 5-minute chart. You're doing one trade at a time. Your position sizing is 8 to 10%, so $200 to $250 per trade, just one at a time. You're making that quick, 20% gain there. You're making $40. A 70% gain, you're up $140. $140. You do that 21 trading days per month there. That's $3,000 a month. So your account more than doubled in your first month there by focusing in on those day trades. And like I said, that's market moving headline news that you're also hearing it confirmed by Tick Strike with that volume coming in. So that's what you want to focus in on for your day trades and scalps. Don't just sit there and say, oh, I'm going to stare at this chart and wait for a trade. Wait for those confirmations. That's going to give you that confirmed entry for a true momentum in the market, because those are headlines that people are going to be buying for minutes there. You're just trying to capture a few seconds to a minute or two on these scalps, and you do that and you're going to see those, 50 to 100% gains within a minute, or 2 minutes, when you have those good headlines. So that's what you're looking for your day trades. Your swing trades 2 to 60 days out till Expo. There might be some catalysts there, like for perfect example, like the meta trade that we made for the July monthly Expo. Yeah, that's July 18th, 725. The Google, that's 2 months out till Expo. So those are 15 to 20%, you know, and that's a perfect example. That Google trade, that was 15%, less than 15%. The Meta trade was even less than that. So you can see that, I'm doing proper position sizing in the account here. The longer term NVIDIA trade, this doesn't expire until December 18th, 2026. Not this year, next year. So what did I do there? That was about an 18% position size. So I do proper position sizings for true account growth, and that's what's important for you guys to understand too. Trying to make 20 trades a day, that is not the way to success. Yes, you might see some people in the room say, "Oh man, look, I made 300%," but I guarantee you their other 10 trades, they lost 70% on them. Because when you try to force trades, just because you love a stock, you fell in love with it, it doesn't work out well. Like I said, with trading, you got to be disciplined, you got to be patient, and you got to follow through with that trade plan. That trade plan there is there to help guide you. And then obviously you have the Newswire and Tick Strike as your momentum indicators for that upside or downside there for confirmed entry into a call or a put or a certain stock that might have headlines coming out. But like I said, that perfect example was the SPY put, when they announced the thing with Canada on Friday. We made 170, 180% gain on that. And then they announced that I don't know, they announced something good and then the market started ripping and then we started buying, Meta and Google and all the other things we started buying. So, we had that true breakout then, and then we made money to the upside. So that was a perfect example of how we made money to the downside based on that news and the headline that came out, and then also the tick strike. And then when we heard that headline coming out on the newswire, which we're going to hear it first before it's on any type of mainstream media, we're going to hear that stuff before it's on CNBC or any other news station. So that's the importance of that newswire because we're going to hear it first, and then when we hear it, I'm going to tell you which is good info to trade on and which is just like, it's not worth it. When I hear something good that I say, hey guys, this is breaking news, markets are going to get that move. That's something that we want to do that day trade and scalp on that I'm trying to focus in for that quick 50% gain or more. And like I said, if you do proper position, don't throw your whole account on it because then if she does get that big green candle, like if she had a breakdown momentum and you're in those puts and then they announced that trade deal, said everything was good, and then she had that big one candle reversal, then you're screwed on that large trade. Like I said, it's all about position sizing. This is how you do it there with proper account size, position sizing, and then, like I said, following through with your trade plan on that daily chart there. I mean, that's what it's there for to help you out with the 6-month daily chart. You can zoom out, look at that bomb cycle over here you took advantage of when you're trading between the SMAs and the MACDs kind of trading sideways, sit back, wait, or find something else to trade. There's always something out there. I mean, there's over 7,000 stocks or 10. There might be a hell of a lot more than that now. I've been saying that for a year and a half. So there's probably a lot more out there. I don't know how many, but there's always a trade somewhere. You just got to find it. So if you're trying to focus on a trade, the news wire's on. Look at the stocks that are, on the news wire the most. Or look at the momentum scanner there. I have the momentum scanner, that's usually by 300 million market cap or higher. Sometimes for the swing trades, I'll look for the market cap of 10 billion or more. But that 300 million market cap or higher, that's what I'm looking for early in the morning as far as the day trades and scalps go. Because those smaller cap stocks there, those are the ones that are moving, 20 to 100% in a day. And like I said, if we just capture a quick 1-2% off of that, usually it's a hell of a lot more. Usually it's like 20-30% of the stock move, which equates to well over 100% with the underlying option there, the derivative. So like I said, listening and waiting for that news wire and then the confirmation with the tick strike is extremely important. You got to be disciplined and you have to just sit there and be focused. Like I said, listen to the tick strike and listen to the news wire. Do some research, do some charting, find some stocks that you want to add to your watch list there that might start that breakout that are in that BDM for a while and you're starting to see it trade in that no trade zone now and you're just starting to get that MACD cross, try to find some setups there. And then, like I said, if you do your research and find some stocks there, shout them out. We'll chart them together and we'll look for a possible entry. That's the great thing about teamwork here and all of us working together. I'm going to give you a list of those top market movers in the morning that I'm finding. I could only look at about 5 of them at a time for me. So there's about 20 of them. So if each one of us look at, 3 to 4 of them at a time there, and we each have ones we focus in on, and then we say, hey, here's one that's getting a breakout on the stream there. We can look at it and see what option is going to be the best to give us max returns, and then we can trade it together. And like I said, if I'm on the stream and I'm sitting back and I'm reading articles or whatnot, that's for the best. That's really being patient and disciplined and waiting for something to come up that we can trade off of. Because, like usually the first, half hour to hour of the trading day, that's usually when you get your biggest moves and your most volatility you can take advantage of with your day trades and scalps. And then usually your last half hour of the day too. So, like throughout the day, there's really not too much going on unless it's just a sustained rally or a sustained drop there. then it'll continue throughout the afternoon. But that's when I'm usually sitting here doing my research, charting, and then I'm just waiting for those moves. So be disciplined enough to understand when you want to sit back and wait for those trades, be patient and disciplined. And like I said, follow through with that trade plan. And this is what's going to help get you to success. Like I said, even if you're only making 40 bucks a day, right? Even if you're doing the smaller size there, going with the 8% of your account, you're doing one trade and it makes 40 bucks. Even if it's just to grow your confidence, you make $40 a day on a $2,500 account. 40 times 21, that's $840, right? Plus 2,500. So that brings your account to $3,340 after 1 month. You divide that by $2,500, your account just increased by 33.6% in 1 month. Tell me a fund manager or any financial advisor that's getting you a consistent 33% a month. That's only with a $40 profit on a $2,500 account there. So like I said, even if you just target one day trade a day and it only let's say you have a $10,000 account, right? Let's do this quick. Watch this. Let's say you got a 25 grand account there because that's too close to 2,500. Let's say you got a $25,000 account. Let's say 50 because that's only 10 times than that. So let's say you got a $50,000 account, right? Let's say that you did a proper position sizing 8%. 50,000, multiply that by 0.08. That's a $4,000 day trade, right? So $4,000, multiply that by 20%, right? A 20% gain. That's what? That's $800. So you made $800 there. Now, this is a small trade. A 20% is not much, right? Now, if you multiply that by 21 trading days per month, that's $16,800. And guess what? Plus 50,000. So that 50,000 in your first month, after 1 month, it's worth $66,800. Divide that by 50,000. And again, that's a 33.6% return. So it doesn't matter what size account you have. If you follow through with this proper position sizing, just one trade per day with a small $40 gain is getting you a 34% return a year. That's over 400% return annualized if you follow through and execute. You don't have to take a $2,500 account and have it be worth $100,000 in 1 month. That's not going to happen. I mean, it can happen, but you don't look for that or search for that. Search for consistency with following through with this position sizing and, like I said, how to find those types of trades and the time frames on those trades. Because even that small gain of 20% on an 8% a trade size, 8% of your account on one day trade that only makes 20% a day, very low risk to your account, right? You're not going to blow your account by getting one contract of that $200 trade on a $2,500 account, right? But that one $200 trade, you multiply that by 20%, that's 40 bucks. Let's say you get 40%, 200 times 0.4. That's $80 a day times 21. That's $1,680. Your $2,500 account is now worth 4,180. Now, if you continue to do that, let's say, so $2,500 account, multiply that by 1.336, right? 33.6% a month. So then you're after 1 month, your account's at 3,340. And then your second month, multiply that by 1.336. So after your second month, your account's at $4,462.24. Your third month now, multiply that by 1.336. Your third month, your account's at $5,961.55. You just more than doubled your account. After your third month or fourth month, whatever we're at, 1.336. Your account now at 7,964. Now, after your fifth month, multiply that by 1.336. Your 6th month, your account's at $10,640. Your account just grew 400% there in just 6 months. by following through with the trade plan and proper position sizing, and you're not risking your whole account there. It takes time to successfully grow your account. That's why we do those trade challenges. And that's why if you go to the Discord and you go to the educational video section there and you look at that video that we were talking about growing your account. This is a perfect example. That was our first trade challenge we ever had. We grew $2,500 account or a $2,600 account to over $63,000 within 2 or 3 months there. Go watch it. Every step and every trade is on there. It's all documented. So that's the importance, guys, of following through with position sizing, following through with your trade plan, and executing on it. If you make large trades or you make too many trades there in your account, you're going to blow your account. I've seen too many people that blow their account and then they're like, oh, I'm going to listen to you next time. And then they reload, come back, and then they do great for a bit and then bam, it's gone again. Follow through with consistency. Consistency continues to grow your account. Don't try to hit grand slams all the time. These singles and doubles, if executed daily, they're going to double and triple your account within a couple of months. You're making a 33% return in your account by following through with just 1 to 2 trades a day there. And that's just day trades. We're not even talking about swing trades. And then you start mixing some of these in that you're finding good technical setups on that daily chart, like Meta, when we started trading Meta. Remember I made that Meta trade when she came off that blue 20-day simple moving average? That's when I made that Meta vertical spread and I said, hey, she's going to go for new all-time highs. That's exactly the day that I called that, because in that BDM cycle, Meta was getting up to that blue 20, rejecting, pulling back, up to the blue 20, rejecting, pulling back, up to the blue 20, rejecting, pulling back. So then when it started that breakout momentum cycle, that's usually what it's going to do when it enters into the bomb cycle as well. So it had that breakout, came down to the blue 20, broke out, came back down to the blue 20, broke out, came back down to the blue 20. And then right here on the 23rd, that's when I jumped into those Meta vertical spreads. And I said, guys, she's going to climb off of support here and go for new all-time highs. And it did exactly that. And if you look at freaking Meta after hours right now, she was above. Let me see what she's at now, because Meta could be all over the place there. Meta right now, 741. Look at how much she's up. She's up almost 1% right now. 741. Now, here's our trade that we have. Now, if we simulate this trade, it was up 35% as of the close, up $1,800. We simulate that, it's now up almost $3,200 and it's up 60%. And look at what its estimated price is right now, $2.81. We have the 735, 740 vertical call spread. We're only halfway to our max potential, which is $5. So we got this at a hell of a great time. That trade from last week, was an 860% gain if you held on to that. And this Meta trade here too is going to be about 500 and some percent for max gain at $5. So great example of following through with the trade plan on Meta off that blue 20, getting into those vertical call spreads. They were further out of the money that went and tested all-time highs. And that's how I made those trades. And that's why we have such large profits on those. And our max profits are 500 to 800% on those types of trades. So that's why when I like to target those vertical spreads is when we're coming off support or when we're just starting that breakout momentum cycle. I don't want to get spreads when we're in the middle of the bomb cycle right there, because then just like here, if you got into here, had a day of a climb and then she started rejecting there and then that spread's worth nothing. So I like getting it off of support there or when it has that new breakout momentum cycle and then going out for a week or two and then making your max profits there. So great strategies we've been utilizing, from covered calls and making money on the larger accounts there with buying shares and selling the covered calls for the premium, that weekly paycheck, executing on day trades based on the news wire and any type of breaking news that we're hearing. And then obviously the swing trades there on stocks that are getting major upgrades and price target changes. So that's how you grow a small account there, by following through with the position sizing, following through with the day trade scalps, The strategies we just went over for that, the strategies for the swing trades I just went over, and then your leaps, your stock replacement strategies for something that's been in that BDM cycle for a long time, and that's just starting to get that breakout there based on a news catalyst. That's when you want to get that leap, maximize potential in your larger account there. And then vice versa. If a stock's been ripping higher and she's at highs, and then all of a sudden you have a news catalyst that's to the downside, going to pull that stock back, then you look at those longer term puts there for a larger pullback. But right now the markets are in momentum. I would not be looking at puts. Obviously, we're at highs, so we're obviously going to have some profit taking at some point. It's probably going to be some point this week. So, look at this. Notice when it's in that breakout momentum cycle, how long does it usually last until it has that pullback for a little bit? So 1, 2, 3, 4, 5, 6, 7 days there. And then right here again, when she pulled back and then started climbing, 1, 2, 3, 4, 5, 6, 7 days, and then pulled back. So right now we're at 1, 2, 3, 4, 5. Today will be the 6th day. So I'm going to take profits just by based on what we've done previously. So I'm going to lock in these large gains that we have. We're going to be up over $3,000 on Robinhood on those vertical spreads and the Q calls. And then on E-Trade here. Now the long account, I have all shares. E-Trade here, we got some shares of AMZZ, and then we have some calls. I'll probably lock in profits on the Meta trade tomorrow because that's going to be up significantly. We'll have well over a 50% gain on that. NVIDIA, we have 2026 expiration, almost 2027. I want to stay into that until she at least reaches 175 to 200. I think she's going to be above 250, maybe even 300 by then. So the longer you could hold that trade, the better. You're going to have maximum profits. This is a less risky trade. That's why it's a larger trade there. It's a leap. It's something that's 8 months or longer until expiration. So you can make that longer term trade with a little bit more capital and be less risky than something that expires in a week or 2 months. That one doesn't expire for a year and a half. So that's how you grow that account, guys. And I hope this class was helpful. I hope you guys enjoyed it. And again, you could just, it doesn't matter if it's $2,500 account, $50,000 account, or $10 million account. Proper position sizings based on percentages, and then based on how many trades. You don't want to over risk your account there on a single setup. And like I said, if you're doing 2 or more trades in your account overnight, try to diversify into different sectors. So I hope you guys enjoyed that class. I'm looking forward to tomorrow. We're getting a nice climb, and it's going to be another solid day of profits to start off the week there. Take care, guys. Have a great night, and I'll be uploading this class and sending it out a little bit later. All right. Take care, and God bless.